Hello and welcome to India Business Hour. I'm Ashmit Kumar and here are the headlines that we're tracking this evening. A sea of red on the Lal Street as geopolitical concerns roil sentiment. Sensex and Nifty post the biggest single-day decline in over 2 months. More than 10 lakh crore rupees in investor wealth wiped out today. West Asia on the boil after Israel and Iran engaged directly in airstrikes. Multiple airstrikes reported from Lebanese capital Beirut's southern suburbs. One of the missiles reportedly hit Hezbollah's media department office. Emirates, the region's biggest airline, has cancelled flights to Iraq, Iran and Jordan for 3 days. Stock markets wobble across Europe and US after the escalation in West Asia. Crude oil prices rise, but the gains remain capped by a weak global demand outlook. Top brokerages do not expect oil prices to cross $80 a barrel. Hyundai India's $3 billion IPO will open for subscription on the 14th of October. If successful, the Hyundai IPO will overtake LIC as the largest IPO in India. Shares of Dabur plunge in trade after the company expects revenue to decline in Q2, blames higher growth in modern trade, e-commerce for denting general trade. Also adopts one-time measure to correct traditional trade inventory. Government rolls out a scheme to provide 1 crore internships at private companies over the next 5 years. Sources say more than 1 lakh internships will be provided this year, with the government likely to spend 800 crore rupees. Indian CEOs are optimistic on global economy but less confident about their company, says a KPMG study. Concerns stem from geopolitical complexities, economic instability and technology. But 93% CEOs say they are looking to boost employee headcount over the next 3 years. Supreme Court allows real estate companies to claim input tax credit for construction of commercial buildings and those specifically built for leasing purposes. Industry seeks clarity on whether similar relief can be replicated for ports, airports, warehouses and data centers. Google flexes its AI muscle in India. The Gemini chatbot goes live in Hindi and 8 other Indian languages. Also launches gold loans and personal loans on the Google Pay app in partnership with Aditya Birla Finance and Muthoot Finance. OpenAI raises $6.6 billion from a clutch of investors, including Microsoft, Nvidia, SoftBank, and Thrive Capital. The company is now valued at $157 billion. Well, it has been a sea of red on the Lal Street as geopolitical concerns roil sentiment. Nifty and Sensex posted their biggest single-day fall in 2 months' time, closing over 2% in the red. 47 of 50 Nifty stocks ended lower. Broader markets fell in line with the blue chips as well. 10 lakh crore rupees in investor wealth was wiped out in just the day's trading session. Prashant Nair is joining us now with a quick wrap of the day's trading action. Prashant.
Markets are oversold. By looking at simple indicators in the very near term, I think, RSI, etc., for example, is at about 16 or so. So it does look like it's getting a bit overdone in the very near term. But let me just tell you what's happened, right? There's a confluence of events which have come together in today's session. And I'll just quickly run you through all of them. The first one hit global markets on Wednesday, but we were saved yesterday since we were closed on the account of 2nd of October holiday. I'm talking about Iran-Israel. Global markets have... while global markets in the past, over the last 2-3 years, have rallied on despite conflicts around the world like Russia, Ukraine, and episodic flare-ups in the Middle East, many are wondering if this will see a bigger impact now. Second, perhaps, is a short-term phenomenon, and this is the shock China rally, driving almost FOMO-led inflows into that market, and perhaps being funded by big outperformers like India. So money out of India, at least in the very near term, markets like India into, what is going up and up, that is China. Number 3, we're also looking at the second quarter corporate earnings season perhaps being a little subdued. Remember, Q1 was also weak, but it was explained away by companies and analysts alike by saying, well, there were elections, there were heat waves, etc., etc. Remember, we just got the pre-quarterly update from Dabur, and it was a bit of a shock surprise on the negative side. Lastly, SEBI's F&O curbs, which were, while widely anticipated and advertised, and they were in line with what was proposed in the month of July, they're ultimately at the margin, and markets move on incremental news flow, positive or negative. They are going to be negative for market volumes down the line when they come into effect. So just to summarize what we've done on the markets from the highs, from the recent highs, and the highs are different for the Nifty, Bank Nifty, mid and small cap indices in terms of dates, but from the highs, the Nifty is down about 4%, the Bank Nifty is down almost 5%, the mid cap index is down about 3%, and the small cap index is down about 3.5% as well. I also looked at banks and non-banks in the Nifty and how they've done from their respective highs. These are the top losers. Axis is down 8%, HDFC Bank is down 5.5%, and ICICI Bank is down 5.5%. Remember, bank stocks, according to many, were just starting their move higher, and well, this is what's happened. Non-banks in the Nifty, top loser from the highs is Reliance, which has lost almost about 8%. And then you've got these auto names, Tata Motors, Bajaj, Maruti, which have lost between 6 and 7%. There is also a L&T, which is down about 6% or so. Small caps, and what they've done from the recent peak. So small cap index made a peak before the Nifty or the Bank Nifty did. Sterling Wilson Solar, top loser there, 20% cut. Tita got down 18%, Data Patterns and Raymond, some of the other stocks. So you just get a sense of, the damage which we've seen. Names like Zensar, Tejas Network and Natco are some of the others. So anything between 13 and 20% so far, depending on what happens next. I just want to wrap this up with some of the very, very near-term triggers, right? And this may determine what happens from here. Geopolitics is one, of course. That is actually number one. That will be the dominant driver. Israeli retaliation, especially, one of the main channels through which these conflicts impact markets is through energy markets. And there are reports which suggest that, well, there could be strikes on Iranian oil facilities. If that happens, there could be a flare-up in oil prices. US data tomorrow will be important. We get the non-farm payrolls number, the jobs data, monthly one, right before markets open tomorrow. And that will give us a sense, weak or strong, whether the Fed is actually ahead of the curve or behind the curve. Remember, they cut 50 basis points last. With respect to China, what's gotten markets really excited is fiscal measures, right? But it's still in the realm of news reports, and this will happen, that will happen. We don't have official confirmation. And I think it'll be key to watch when China comes back from holidays, whether they actually walk the talk. And lastly, we kick off the festive season with Navratri, and demand trends will be very, very keenly watched. As I said earlier, Q2 is expected to be weak, and markets are looking ahead at H2 of FY25 for earnings to start to pick up. So some things in the very near term which perhaps determine where we go from here. Back to you.
Right, Prashant, thanks a lot for that. And well, speaking of China, Ben Powell, the chief investment strategist at BlackRock, believes that global investors will look to move their money from other emerging markets into China. However, he also added that India's long-term outlook continues to look good.
I think, look, there's a lot to like in India, as you guys are extremely aware. So the combination of demographic plus productivity gains, digital inclusion, infrastructure, and so forth. I think the big picture in India continues to look very, very favorable. I do think if China is going to follow through on its stimulus promises, which we may see as soon as next week, it's quite likely that some of the money that global investors have put to work outside of China, be that in other emerging markets or other parts of Asia, probably gets pulled back into China.
Well, meanwhile, West Asia continues to be on the boil as tensions between Iran and Israel escalate. Israeli missiles reportedly struck Lebanese capital Beirut's southern suburbs. One of the missiles struck Hezbollah's media department office. Yesterday, Israeli missiles hit a medical center belonging to the Hezbollah-linked medical center. At least 9 people were killed. It was the second airstrike on central Beirut this week. It has been more than 36 hours since Iran fired 180 missiles at Israel in response to the killing of Hezbollah leader Nasrallah. Israel's Prime Minister Netanyahu warned that Iran would pay for it and he would choose the right time to respond. Israel's ally, US President Joe Biden, has said that he will not support an attack by Israel on Iranian nuclear sites. However, he added that G7 nations agree that Israel does have the right to respond.
איראן עשתה ערב טעות גדולה, והיא תשלם על כך.
Iran made a big mistake tonight.
and it will pay for it. The regime in Iran does not understand our determination to defend ourselves and our determination to defend against our enemies.
וכנראה יש בטהרן אלה שלא מבינים זאת.
The security of the region is the security of all Muslims, and we do not want any war or bloodshed. We were left with no choice but to respond. If Israel decides to retaliate, then it will face harsher reactions.
Well, staying with tensions from the region, the Israel Defense Forces have claimed that they have killed 3 senior Hamas leaders, including their Gaza government head, Rawi Mushtaha. Israel said that the leaders were killed in a strike on an underground compound in northern Gaza. There was no immediate comment coming in from Hamas. This comes after at least 51 people died in southern Gaza after Israeli airstrikes and a ground operation targeting the Khan Yunis area. Well, from one conflict to another, Ukraine has said that Russia launched a major drone attack on 15 regions in the country overnight. The Ukrainian Air Force has said that it shot down 78 of the 105 Russian drones during this assault. Meanwhile, authorities in Kyiv said that Air Force has downed around 15 drones in the city and its surroundings due to an air alert that lasted more than 5 hours. This comes after Russia took full control of a strategic hilltop town in eastern Ukraine. Well, bringing in all the oil market action, depending on these cues coming in from West Asia as well as Ukraine, oil prices soared over 5% as the crisis in the Middle East deepened. However, the gains remained capped due to a weak global demand outlook. Brent is currently hovering around $75 per barrel mark as investors wait the escalating conflict in the Middle East. Brokerages expect prices to stay below the $80 a barrel mark in 2025. Goldman Sachs is predicting $77 a barrel. Citi's forecast is the slowest at $60 a barrel. And well, back home, Hyundai Motor India IPO, touted to be India's largest ever, is expected to open for subscription on October 14th. The price band for the $3 billion issue is likely to be announced next week. This is the South Korean auto major's first listing outside its home country of South Korea. With a market share of close to 15% in India, Hyundai is India's second largest car manufacturer. If successful, the IPO will surpass the current record holder, which is held by LIC, which raised around $2.45 billion. More news from the markets. Dabur fell around 6% after the FMCG major said that it expected to see single-digit growth in the second quarter. The firm attributed this to heavy rains across the country and higher growth in modern trade, e-commerce and quick commerce. Manglam Malu is joining us now with more details. Manglam, tell us, how is the market responding to this guidance coming in from Dabur?
Well, the street was coming to terms with this second quarter update, largely because prior to this, all the communication, the management had guided for double-digit revenue growth in this financial year. Come the second quarter, because of heavy rains and flooding in parts of the country, there was impact on out-of-home consumption. But more importantly, there was a lot of inventory stockpiling in general trade channel because of the fast growth that the company has seen in its quick commerce and e-commerce channels. So to that extent, they are looking to rationalize that. And as a result of which, primary sales in the second quarter would be lower, and that means a double-digit, mid-single-digit revenue decline. At the same time, margins coming back to mid-teens to high teens, as against their own guidance of close to around 20% as well. Though the company says that this is temporary, and come October, they are expecting demand to pick up. This lost quarter is something that the street is rationalizing for, as a result of which the stock was lower by 6%. No major change in underlying demand conditions, however.
Right, Manglam, thanks a lot for that. Now, in what comes as a big relief for real estate players, the Supreme Court has allowed them to avail input tax credit on construction costs for commercial buildings. This order allows the players to claim the input tax credit retrospectively. We hear that the industry is seeking similar relief for airports, factories, warehousing, and other sectors. And CEOs in India are confident that the global economy will recover over the next 3 years. However, they are less certain about the growth of their own companies, according to a study by KPMG in India. The study found that the level of confidence of these leaders in their own company's growth prospects has declined to 68% from 71% in 2023. Additionally, 66% of executives have said that they would be willing to divest a profitable part of the business that was damaging their reputation.
As compared to last year, I would say aspects of operational issues come across as a key concern. And this, along with aspects of cybersecurity, the element of geopolitics is consistent. But aspects of technology, they have taken a higher pedestal in the current year. And this is all around AI, as you would expect.
Well, the government has launched the PM Internship Program, which aims to provide opportunities to over 1 crore youth. Sources have told CNBC TV 18 that more than 1 lakh candidates will be enrolled in this financial year. The first batch of interns are likely to hit the shop floors by early December. Shivani Bajaj joins us now with the details. Shivani, take us through the contours of this scheme and what the rollout of this scheme will look like.
Well, yes, the Prime Minister's internship scheme has been kick-started finally. Remember, the internship portal that is a key part of the scheme is now live for the companies participating in the scheme. The portal will open for the candidates on the 12th of October. That's what the sources are telling us. According to sources from the Ministry of Corporate Affairs, candidates will have access to the online portal starting October 12th, which is with the first internship offers likely to be extended between November 8th and November 15th, with the first batch of interns on the shop floors by early December. Government is basically running this as a pilot project as of now. Sources suggest that the government aims to create 1,25,000 internship opportunities in the current financial year as part of the Prime Minister's internship scheme, with the budget of 800 crore allocated for the pilot project. Sources say that currently 111 companies are already on board the portal, presenting a total of 1,077 internship offers. This initiative primarily targets Indian youth aged 21 to 24 who are not in full-time employment or education as of now. Eligibility educational qualifications span from high school to various undergraduate degrees like BA, BSc, BCom and B Pharma. However, candidates from prestigious institutions like IITs, IIMs and those in master's degrees are ineligible, as are those enrolled in government skilling programs. As we reported earlier, to qualify, candidates must have a family income not exceeding rupees 8 lakh for one financial year and cannot have a permanent government employee in their family. The Prime Minister's internship scheme, as we know, aims to provide internship for 1 crore youth across top 500 companies over the next 5 years. Sources say that the participating companies primarily hail from the sectors such as agriculture, pharmaceuticals and automotive as of now. Back to you.
Right, Shivani, thanks a lot for that. Now, the Income Tax Department has secured a major victory in the Supreme Court today, a victory that could affect as many as 90,000 cases. The top court has upheld the Tax Department's power to issue reassessment notices from April 2021 under the old regime. Now, here are the facts of the case. The assessment years that were under question before the Apex Court were from assessment year 13-14 to assessment year 17-18. Now, bear in mind that under the Income Tax Act, as a safeguard for the benefit of taxpayers, there is a safeguard by way of a time bar. The Income Tax Department cannot go back indefinitely for reassessing previous tax records. They cannot go back 15-20 years. There's a time bar. The time bar, the deadline of which was falling within the COVID period, the first wave, COVID pandemic period, is something that the government had to account for. And to account for that, they had come out with a legislation called TOLA. What this legislation essentially did is that for reassessments, deadline of whose were falling within the COVID pandemic period, that deadline was extended. Essentially, that was the net effect of TOLA. This deadline was extended to the 30th of June 2021. Here's the catch. The catch is that in the Finance Act of 2021, there was a complete revamp of this entire reassessment structure. This revamped reassessment structure came into being on 1st of April 2021, which gave rise to massive confusion as to whether or not reassessment notices issued within that period, 1st of April 2021 to 30th of June 2021, will they be issued under the new regime or the old regime. The tax department had issued as many as 90,000 notices under the old regime, and that was the question that was up for consideration before the apex court. The long and short is there are a number of caveats to bear in mind. The long and short is that the apex court said that in trying to read TOLA with the Income Tax Act, it necessarily means that this provision allows for income tax reassessment notices to be issued even after the 1st of April 2021 as per the old regime. So again, important clarity coming in for the taxpayer as well as for the tax department. This, of course, is a huge win. This is what they had been batting for, citing those 90,000 cases. The apex court, however, importantly pointing out that there are a number of safeguards to bear in mind, and only limited to those conditions will then these reassessment notices become legal. So an important verdict, this an important day for the Income Tax Department in the courtroom. But speaking of the courtroom, more courtroom action. The Supreme Court has restrained police action at Sadhguru's Isha Foundation. It has transferred the case from Madras High Court to itself. The parents of two women had claimed that they are being forcibly held at the foundation, but the women in question rejected the allegation. Also, the Supreme Court has directed centre and states to do away with provisions in the prison manuals which assign work to prisoners as per their caste. The court said that these provisions are unconstitutional and also directed caste columns for under trials to be deleted. It has also ordered the centre to amend the model prison manual and gave states 3 months to revise their prison manuals. Well, with that, coming up in India Business Hour, OpenAI raises $6.6 billion from a clutch of investors, including Microsoft, Nvidia, SoftBank, and Thrive Capital. Details in just a bit. And you can also catch all CNBC TV 18's news and updates on Facebook, X, Threads, Instagram, and JioCinema. Well, Google has announced a slew of new updates at its 10th edition of Google for India event in the national capital. The company laid out its long-term plan for India and focused on boosting its artificial intelligence roadmap. Speaking at the event, Google India Managing Director Roma Datta Chaube said that the company predicts that AI could unlock 33 lakh crore rupees economic value for India by 2030.
Now AI is multiplying this progress by several orders of altitude. India's AI-fueled leap has the power to unlock economic value to the tune of 33 lakh crores by 2030.
An artificial intelligence startup, OpenAI, has raised $6.6 billion from a host of investors, including the likes of Microsoft, Nvidia, SoftBank, and Thrive Capital. The company is now valued at $157 billion after this fundraising round. Rachna Dhanrajani joins us now with more details. Rachna, how will OpenAI be utilizing these funds, $6.6 billion?
Global investors such as Thrive Capital, Tiger Global, SoftBank, along with names like Microsoft and Nvidia, are now a part of OpenAI's cap table with an investment of $6.6 billion. In fact, this is the largest venture capital deal, valuing the company at $157 billion. However, it's not just the funds that the company was seeking, but also a commitment. Sam Altman wants his investors to remain exclusive and not be associated, specifically with 5 AI-focused startups that are being seen as their rivals. These include Elon Musk's xAI, OpenAI's co-founder Ilya Sutskever's new company Safe Super Intelligence, and Anthropic. This fundraising also comes in when OpenAI is undergoing major structural changes. The company is now effectively transforming from a non-profit to a product-focused, for-profit company. This means that there won't be a cap on returns for investors, and reports also indicate that investors can ask for their money back if it hasn't completed these changes in the next 2 years. This move has obviously attracted many investors, but is likely to have contributed to an exodus of many long-term employees in the company. The list includes names like CTO Meera Murati, co-founder Ilya Sutskever, and John Schulman. Even Greg Brockman is said to be on a sabbatical. Now, if you remember that popular picture where 4 of them were posing for the camera, now 3 of them are effectively gone. The list also includes senior research team members in this mass exodus. But coming to the fundraise, OpenAI wants to double down on their their AI research, increase compute capacity, and continue building tools. And that's where it plans to deploy its funds. This round was led by Thrive Capital, which was also said to be in talks last year just before Sam Altman was ousted. At that time, the valuation was about $88 billion, and now in just a year, it has almost doubled up to about $157 billion. And Thrive has this time participated, but with an option to invest another $1 billion over the next 1 year at the same valuation. Apple was also said to be in talks, but it's said that they backed out in the 11th hour. Now, AI has been the emerging theme, and just the last year, we saw major investments in the industry. OpenAI's $6.6 billion fundraise that we're talking about now, but it comes just weeks after Elon Musk's XAI closed a fundraising round of about $6 billion, and Anthropic raised about $4 billion with investors like Amazon and Google.
Right, Rachna, thanks a lot for that. Now, the Shapoorji Pallonji Group's flagship engineering and construction firm, Afcon's Infrastructure, is looking to raise close to $1 billion from the markets. CNBC TV 18's Meghna Sen reports that the company plans to use these proceeds to expand its business across 5 key verticals and pay off some of its debt. Take a look.
If you're living in Mumbai, you have probably heard about Package 14 of the Maharashtra Samruddhi Mahamarg that everybody is talking about. If you haven't, do stick around. This incredible project features India's widest and Maharashtra's longest road tunnels. Package 14 is the 13.1 kilometer stretch of the ambitious 55,000 crore rupee, 701 kilometer Mumbai-Nagpur Expressway project. The project starts here in Igatpuri and ends in Vashala in Nasik, and will have 2 flyovers or viaducts and 1 tunnel. The package is a 2,400 crore rupee order, and Afcon's Infra, which backed the order for this package, says it has completed the work in a record 2-year period. But Afcon says the 7.78 long twin tunnels, while a feather in its cap, are not its only achievement.
The company has also delivered Chenab project, which is India's tallest railway arch bridge. We have done under river metro tunnel in Kolkata.
Nor is it the only project it claims to have finished ahead of schedule.
A strong methods and engineering group. We called it the construction methods and engineering group called CNBC group. Every project we try to see how to simplify. That is how we find that our 87% of the projects in the last 10 years have been completed on or ahead of schedule.
Now, the company wants to do more such projects, and that's where it planned 7,000 crore rupee initial public offering comes in. However, only 1,250 crore rupees of this will go directly to the company and will be used for a variety of purposes, including the purchase of construction equipment.
In the total IPO, we are looking at 1,250 crores of fresh issuance. Of that, 500 crores we are going to use towards repayment of debt. Around 350 crores we are going to use towards working capital purposes and 150 crores towards capex. We have kept 250 crores towards general corporate purposes, and as we get the money, we'll see how best to use that. But at the moment, we can say that a sizable portion of the amount will be used towards debt repayment, and that debt will significantly come down.
As of the end of December 2023, the company's total outstanding fund-based current and non-current borrowings stood at a little over 2,880 crore rupees, and its debt-to-equity ratio stood at 0.85. The expanded capabilities some of its proceeds are expected to give it, the company says will also help it deliver quickly on its mammoth 35,500 crore rupee order book, which includes 67 active projects across 13 countries.
We are doing undersea tunnel in Mumbai. It's for high-speed rail, which is 16 kilometers below the ground. Out of it, 7 kilometers below the sea is one of the major upcoming projects in India. And number of ports we are doing. And Maldives particularly, we are connecting 4 islands. And it's a very important bridge. You can call it as a friendship bridge between India and Maldives.
The company hopes to improve on the 6,500 crore rupees revenue from operations and the 195 crore rupee profit after tax it recorded for the 6 months ended September 2023. But it admits that there are risks to both order book growth and successful execution. These range from failure to qualify for or win new contracts and a high dependence on government or government-owned clients to the possibility of premature project terminations, the capital-intensive nature of the industry, an environment where project financing is difficult to come by, and delayed payments from customers. Nevertheless, the company is confident India's mega infra push and its own proven track record to keep its engines running. In Igatpuri, Meghna Sen for CNBC TV 18.
And with that, it's a wrap on this edition of India Business Hour. Thank you so much for watching. News and updates will continue right here on CNBC TV 18.